Hello and welcome to Connect, the weekly podcast with the California MBA, featuring one-on-one interviews with movers and shakers in the mortgage industry. I'm Susan Milazzo, CEO of the California MBA, and I'm happy you could join us today. Before I welcome today's guest, I'd like to thank our 2024 President's Council sponsors. And these are a group of companies that provide a tremendous amount of financial support for the California MBA, in large part so that we can continue to be strong voice for the real estate finance industry in California before the California State Legislature and our regulators. So I'd like to thank this year's President's Council sponsors, and those companies are AmeriHome, Arch MI, CMG Financial, Consolidated Analytics, Funding Shield, Guild Mortgage, and Western Alliance Bank. Thank you all so much for your support. We appreciate it. With that, I am very happy to welcome today's guest, Aaron Samples with Logan Finance. Aaron, welcome.
Hi, Susan. Thanks for having me today. I appreciate it.
Yeah, happy to get started here. So I always like to start these conversations out by finding out how we got into the mortgage industry. It's usually a pretty interesting story. So tell us how you got into the business.
Well, I don't think my story is all that exciting, but I actually started in the mortgage business as a MLO for a consumer direct call center for what was then CTX Mortgage. And we primarily did Lending Tree leads out of that call center. And by the way, Lending Tree was a very new company. I think there were some questions whether they would even be around or if it made sense at the time. At the time I was selling insurance. I had a buddy of mine that was another insurance broker. He did an interview at this place and he was telling me all about it, said you have to go interview. And I managed to get in an interview, had no idea what I was interviewing for, what they did or anything about the business, candidly. And ends up that I got the job and he did not. Oh. And by his choice, we never spoke again, but I think looking back, it worked out really well for me, I guess, in the long run.
See, and once you get in the business, you just where do you stay? You didn't go back to insurance, you stay in the mortgage biz.
I can't seem to get out of it, that's for sure.
Well, you've had a long history in career in the mortgage industry. Of course, we're coming off of one of the toughest years from origination standpoint that we've had in a while. How can companies be competitive in a purchase market?
Yeah, I think that's an age-old question, right? And in some ways, you may not know this, but I think last year, and certainly I think going into this year, a lot of the non-QM shops, and Logan Finance is certainly primarily a non-QM shop. We had a very good year last year, very good year last year. We experienced probably 2x growth last year from the prior year. And in fact, we're forecasting another year, this year in 24, of 2x growth for Logan. And coming out of Q1, we're actually way ahead of that. So,
wow.
We feel really good about where we are in the market. I think there's a little bit of tailwind in the non-QM space, and we're certainly taking advantage of that. That said, I certainly understand how difficult the mortgage market has been here over the last several years, candidly. Probably the most difficult market with respect to mortgage and housing, I think, since World War II. Right? So really difficult. There's all kinds of different reasons for success and how you deal with a market like this. And I think how you deal with any market, candidly. I think the same principles hold true, but I can tell you what the folks in our organization do that are most successful. And I can really boil that down into to 3 points, candidly. And I tell folks that we're talking to and new A's that come in, that these 3 points really define our best salespeople and our most successful people. And number one is really simple. They know their program guidelines like the back of their hand. They are perceived as the industry expert in their area, no question about it, to their customers, their consumers, their realtor partners, other partners, etc. And I think they stick pretty closely to what they do well. I think anytime in business, certainly at a company level, if you dabble in something, you open yourself up to a lot of risk. So I think these folks have figured out who they are, what they do well, and how they can really be experts in that particular field, in their particular region, whatever it is they're working on, right? And that doesn't mean you can't learn and spread your field of knowledge and be really good at more things. But I think that if you try to be everything to everybody, it becomes really difficult, and you open yourself up to a lot of risk.
Yeah.
Number two, they work in their backyards. So I think post-COVID, we all went home. We became kind of a remote workforce in a lot of ways. And I think a lot of folks, see the entire country as their client base. And that's great. I think, if you think about it big picture, it opens up a lot of opportunity. But what happens is that becomes very transactional. If you're sitting in New York and you're calling on an account in California, I don't know that that's the best of relationship. I think it becomes more transactional. So they work in their backyard. They do relationship selling. They work on relationships with their consumers and their referral partners. And they do what they do very well, and they do it in a relationship-based way. There's no question that those are our most successful people that follow those two principles. And the third is really, really simple, and it's probably going to drive some people crazy. The third is work.
Right? It's
those
just
folks,
down to it.
Yeah, those folks that are most successful in our business, these people work nonstop. There's no question about it. There's a lot of jokes in our industry that I've heard over the years. We only work half days in the mortgage business. Pick any 12 hours you want, that's fine. And I think that's true, and I think that's true to a minimum. So these folks really work. I think they plan their work and they work their plan, and they also work smart, right? We have so much data and analytics at our fingertips today, and in fact, here at Logan, we provide that to our folks. We can really put you on top of the business. We can show you how much business there is. We can show you who's getting the business. We can calculate what we think our wallet share should be, or what our overall market share should be in an MSA. And to me, when you have that information, if you put these other principles in play that I just spoke about, it's really hard to miss.
Yeah. The put the work in. You gotta definitely include that one, right? That's that is key for anything. How does Logan Finance set themselves apart from competitors in this space?
Yeah, I think that's a great question. And I'll tell you the way that I look at it without getting too deep. We are all selling money. We're all selling widgets. Some of our competitors may have more products than we do. Oftentimes we have more or different products than our competitors. Perhaps we look at a guideline a little different, or they look at a guideline a little different, et cetera. But at the end of the day, we're really selling our people, our expertise, our commitment to service, back to that relationship-based approach. We want to make sure that we're fulfilling our obligations to you, and that we're ensuring that we take care of your customer just as good as you would. So again, big picture, we're all selling something very similar. We're focused on the experience that you receive through Logan and the comfort you have in ensuring that you have control over the transaction, and that we're taking care of your consumer and your referral partners.
Excellent. What are some of the opportunities in today's non-QM market?
Yeah, look, Susan, to keep this broad, I think that I get really excited, and I'm really bullish about the non-QM market as we look forward, right? I mentioned when we started this that we've almost 2x over the last couple of years in volume and revenue, right? And it's really hard to get a market size in the non-QM space. We don't have the same reporting. It's not matured like you get from the GSEs and some of the other third parties. But I think that if you just kind of think about where our economy is moving and how people work today, right? We have folks that do Uber, they do Instacart, maybe they have something entrepreneurial as a third job, and they just don't fall into the black box, so to speak. So we're seeing that kind of gig economy grow through the process. Also, I think that if you just kind of look what the Federal Reserve of Consumer Finance reported here recently, we have a record about 20% of American families are now in a privately held or self-employed business. That's an all-time high, by the way. And from their report, we have almost 450,000 new applications coming in on a monthly basis. So I think we see a real shift in a lot of ways in terms of society and how people are operating and working as they go forward, right? And then from the data that we have, and we get this data from some of the big pricing engines and scenario engines that we do business with in the non-QM space, we believe only about 10% of MLOs and brokers in NMLS are doing non-QM product. So without getting into products and things of that nature, what the opportunity is about a 90% market share ahead of us that has not been tapped, and an economy that's driving into that type of lending. So, we're very optimistic as we think about the non-QM space on a go-forward basis. And look, I want to be clear. Our average consumer has about a 68% LTV and nearly a 760 FICO. That's not a bad book of business in my view.
Right. Yeah, it's definitely the way to go. Do you think that's incredible that the market is that strong and that there's so much opportunity out there? Do you think a lot of that was driven, like the growth was driven through the pandemic, where people really reevaluated their work-life balance and decided to start their own business? That's interesting.
I think that's a big part of it, right? I think people they really covet their life balance, work-life balance today, and we're just seeing a lot of folks move to that. Those type of opportunities. And look, another thing that has really helped the non-QM space, and I would be remiss if I didn't say this, but as rates ran up, a lot of loan officers and brokers out there that were really making a living on doing refinances and streamlined refinances and kind of low-hanging fruit, all of a sudden the phone stopped ringing. Yeah. And you had to find a way to go get your business and how to fulfill a need in your community. And it's interesting to me, we now have MLOs that we do business with that have created an entire non-QM business, and they're probably doing better than they did even through some of our best times after the pandemic there.
Yeah, it's very interesting to kind of hear a little bit more about the health of that segment of the market for sure. So talking about kind of your leadership roles over the years, I mean, it's definitely different being a leader in a hot market versus being, leading a company in a challenging market like we're kind of coming off of, apparently not Logan, but much of the mortgage industry is coming off of in 23. What are some advice that you can share with other leaders about how to navigate challenging times?
Well, we certainly have our challenges. We've been fortunate here over the last year, but I think that, look, I think managing in the mortgage business and being a leader in the mortgage business is really difficult in good times and in down times, both, right? They both present their own sets of issues. Some are good issues to have, but they're problems nonetheless at the end of the day. For me, I've always felt this way, and even maybe more strong today, it's always about the people. Right. And I know we had a lot of technology and a lot of offshoring and a lot of different things that we use in the space. And we need to do that to drive down costs. But it's about who you surround yourself with. You have to be a very good communicator to be a good leader, in my view. It's imperative. I can't stress enough how much communication matters. I think at the end of the day, it really comes down to the talent you have around you. Them understanding your vision, you being able to communicate how to execute on that. And then, people work for people, they don't work for companies. So back to that relationship comment that I made early in the podcast, you have to have those relationships with your key people and your employees in your organization. I think much like we were kind of talking about successful salespeople, you have to be an expert at what you're doing. I think you have to instill confidence into your organization, that you really understand what's happening in your organization, what's happening broadly in the mortgage markets and the housing markets. I think a lot of folks sometimes you don't get to see what everybody in the C-suite's doing when you're in the field and you're just working your rear end off. But there are times that I think folks are probably enjoying their TV program in the evening, And a good leader is just settled in to read several hours of information that's pertinent to the mortgage markets, to their corporation, et cetera. So you never can stop learning, and you really got to be an expert at that. And then look, at the end of the day, you got to be really, really level-minded and resilient. The only thing constant in the mortgage business, at least in my tenure, has been change.
Yeah.
And, whatever is going on today is going to be different down the road, and vice versa. So celebrate your wins, learn from your losses, but just be really resilient. Keep working, keep focused, do the things that we've talked about you need to do to be successful, and control what you can control. And that's how you kind of get through some of these downtimes as well.
Yeah, I think being resilient is a key factor, right? Because, the good times are going to be there, and, there's going to be some challenging times that you're going to have to get through. So overall, it all balances out over time, I suppose.
Let's hope so.
So, you've had a great, successful career in the mortgage industry. We've talked about some, leadership values. What advice would you give to a young mortgage professional just starting out?
Gosh, I think we've talked about most of that already, kind of leading up to this, right?
Yeah.
Hone your craft, commit yourself to yourself. This is your career. This is a great career to be in. You can accomplish a lot of things in the mortgage space. I wish we could better communicate that to some of the folks coming out of high school and college and get them into our industry, right? You can't get too high, you can't be too low. You got to be resilient, like we just talked about. Something that I think, and I saw this some time back, I don't know who to attribute it to, but I think you have to remember, this shall too pass. When you're on top of the world, the market's in your favor, everybody's lined up behind you, and you're the most brilliant leader in the world, just keep in mind that that's going to pass. And when you're down in the dirt and you're working as hard as you can work and nothing seems to work out for you, that shall too will pass. So I think you have to keep that mindset, and you just got to keep working and doing those things that we've talked about through this podcast to be successful. And you do those things, and I think you have a great career ahead of you.
Yeah, great. Thank you. Yeah, it's and I think that there are a lot of people such as yourself that are very willing to share their expertise. So, listen to the people who've been in the industry for a while.
I worry about the remoteness we have now after COVID, candidly, because I think so much was learned, and I get this work-life balance, and as much as anybody, I love working from my home office on certain days, but so much is lost in mentoring, and for folks coming into the industry, listening and seeing, that it concerns me a little bit as we go forward.
Yeah, definitely have to find a way to mix both of those in. I would agree with you. Aaron, Logan Finance became a member of the California MBA this past year, which I'm always grateful. Thank you for your support. Can you share with our listeners why the company chose to support our organization?
Yeah, of course. Look, we're myself, a long time, and certainly Logan Finance, big supporters of the MBA. I think we certainly want to support any organization that fights for our cause and the people in our space, right? I think more specifically, in terms of the California MBA, Logan Finance is kind of a heavy East Coast geo company. And we've made a decision to spread market share into other geographies, if you will. And certainly California and the West Coast is a big part of that business plan. So we certainly see supporting the California MBA, our people, our customers in that area, certainly this chapter, is just a no-brainer for us. So I know we have Nick Pabarkis, you and I were just talking about before we started the podcast, who runs sales for us out there, and he does a lot in the MBA. We're just thrilled to death to be a part of that and to work with him and you and the organization as we go forward.
Well, thank you. We appreciate that. Nick is wonderful to work with. And Aaron, thank you so much for being on the Connect podcast.
Thanks, Susan. I appreciate you having me.
And thanks to all of you for joining us today. To access any of our past episodes, you can follow us on our YouTube channel. We're also available on SoundCloud, Apple Podcasts, and Spotify. That's it for this week, and we'll see you next time on Connect.
Here we go.